Hello, everybody, and thank you for joining us for today's episode of Trade the Chain. Happy Monday. It is February 22nd, and it wasn't a happy morning, I'll tell you that. The markets bled out both on traditional side and the crypto side, scaring the crap out of people, to be honest with you. But we're going to dig into that and kind of prophesize on why we think it happened and where it's going short term now, whether it's recovery or downwards. The first thing I want to do is just read a little message, PSA of sorts. There's been a couple of members of Trade the Chain have made us aware of phishing emails that they've received this weekend from someone posing as me. So I want to take this opportunity to assure you that Trade the Chain has not been compromised in any way, and that all member data is safe and secure. And the scammer appears to have gleaned contact info from YouTube comments rather than trying to infiltrate our community. So basically what that means is, you know, they see somebody post a comment, they go in, they grab your email and off your YouTube account, and they email you with my picture, and it looks like it's coming from my email or my account, and they tell you to give up money and send all your crypto and stuff like that. But I want everybody to know that none of us here at Trade the Chain will ever ask you for money or to invest in any projects or anything of that nature. It's just not who we are, and it's not our business. And like always, there will be YouTube scammers galore, Twitter scammers galore. You'll see in most of the comments that there's actually no scammers, or maybe one or two that make it by, and that's because we heavily curate those comments and hold those out before they get published. So I just want to say I apologize to anybody who got a scam email that had my mug on it and my name attached to it. It's not me. I'm never going to contact you and tell you to send crypto or invest your money in any way. So that being said, Ryan, off to you, my friend.
Thank you, Alex. This is just a reminder that all content provided by Trade the Chain is strictly for informational and educational purposes only. This is not investment advice. Do not at all listen to us, ever.
Ever.
Trade the Chain is brought to you by Trade the Chain, a global 24/7 community of traders of all ages and all abilities, all using AI-driven sentiment indicators and actionable alerts to help them beat the market and trade like a crypto insider. Check out tradethechain.com for a 14-day trial. Man, that board, it's mostly neutral now, but this morning it was just all red. It looked like it was like taillights in a traffic jam. It was terrible.
Wait, Ryan, I know we got to get to the Market Rebellion plug, but I do want to say, we spoke about this before the show. Now, we had the Bull and Bear episode on last week, and CJ and I were very bullish on the market going through the weekend, while Monty and yourself were very bearish. Now, I'd love to say you guys won, because today, Mondays are considered part of the sell-off weekends of crypto. But one of you turned around in your position halfway during the weekend, or actually it was Friday. And so you are the only winner from that battle. Congratulations, my man.
Yay. I didn't want to be right. I just saw what I saw. So I'm wearing my my bloodbath sweater for the day.
Sorry, CJ, you may continue, sir.
And marketrebellion.com/crypto. This is Monty and myself and our community. And with this, you get exclusive access to trade ideas, our macro portfolio allocations, a pro charting platform, a trading education curriculum, and an elite community of traders all throughout the world, and much more. If you're serious about trading crypto, this is the service that gives you everything you need all in one place. You can start your first month trial for just $1 at marketrebellion.com/crypto. We have a mobile app as well. But yeah, come try it out for just $1. Come chat with us, ask us questions. We'd love to have you in the community. And yeah, following up with what Ryan and Alex had said, we are on quite a bloodbath this morning. We had quite a big scare off. I was not expecting waking up to this. It's kind of like one of those reminders where you get shocked back into reality, and it's like, oh, I'm in a market. I thought this was a money printing party for a second, because that's what it feels like from a market participant perspective. Seriously, but let's add some indicators here, starting with the sequential, and then let's get some support here with some Keltner channels. And when you pull that up, you see some perfect support that we're hitting right here. Let me get the crosshair out so you guys can see that.
Mm-hmm.
Perfect support right here in that middle Keltner channel at 47,000. So if we zoom out on the daily and we take a look at how this trend has behaved when interacting with these channels, we can see that, sometimes we will actually touch the white channel and come back up and continue the bullish trend. It's just, this is the first time that we're truly breaking below that top Keltner channel, which is a little bit of a warning signal because you can see what happened right here when we first started consolidating below this level and eventually turned over and had a little bit of a retrace. We're not there yet because, as you can see, we're still holding this white middle Keltner channel very nicely. So bullish momentum is still occurring. It's still going on. We had a very nice whipsaw in a lot of these assets this morning. They were going down to really low prices, but we got a massive buy pressure that ultimately kicked in and drove us back up to our current prices. So we've had a really nice bullish kickback. Now, from a daily perspective, it's scaring us a little bit, like you said. But when we look at the weekly perspective from a longer term, we can see that, if we go back to kind of the longer term time preference, we can see that we still have a couple more days to truly see how this week ends up and closes. If we continue to close above this top band, and even if we close at our current level, or even a little bit above our current level, that is still likely a continuation of bullish price action, in my opinion. There's some other things about the magnitude of a potential pullback that Peter Brandt was talking about this morning about whether, we had 6 30% corrections in 2017. Thus far, we've had a 20% correction or about 25% correction. So we may need to get a couple more of those, but we'll see. The bulls have certainly bought up this retrace very quickly from what we've seen thus far.
Yeah, it's pretty funny, right? You kind of forget that this is a market that goes both ways. It just sometimes feels like you buy and it keeps going up, but that's not always the case. And I think we can learn a few things from this past weekend. One, that the retail trader is actually playing an important role in this market. And two, that sentiment data is more important than ever because of this increasing presence of the retail trader. So a lot of you probably heard that Elon Musk called crypto a bit expensive. And just like that, sentiment shifted amongst the retail trader from bullish to bearish. And I think that was a large contributor to this decline. So although we couldn't necessarily use the technicals to tell when this was coming, the technicals did provide a good estimation as to where this price was going to bottom out at. Although Alex may say that I was a flip-flopper and that I flip-flopped from my perspective last week, one thing that I did say on our Thursday episode of Bulls vs. Bears, that if we did get bearish price action, this would be a good level for support, this setup 9 on the 4-hour chart. And historically, we've seen good support from the setup 9s, but this is also supported by the Bollinger Bands. So if we take a look here, typically we get good support. I'll switch this to the 1 hour because that's what I was watching this morning. We typically get good support around the bottom level. So as you can see, we immediately kind of just stayed with this bottom level the entire way and hit this 47K level. But it seems like for the most part, the candle body closes have remained above this blue Bollinger level. So I'm watching this closely. A break below this level, I think, could be indicative of further bearish price action. But for the most part, I mean, the technicals held up well in the sense that they allowed us to kind of estimate when the bulls would start picking up the buy pressure. And it looks like they were content to do so around 47K. And you can see that even further here, this confluence of the 47K level on the 4-hour chart, as well as this middle Bollinger Band level on the daily chart, providing some really nice support for Bitcoin here. So although I do think there is the potential of some more bearish price action this week, if we don't get any more positive sentiment, I could definitely see a bit of consolidation in this range eventually bottoming out at this level that we wicked down to. And that I don't think that would necessarily be a bad thing. I think it would be very healthy. 47K still leaves very few traders at an unprofitable price. So I think the bulls will find more support here going forward, but I don't think we've seen the extent of the bearish price action just yet.
And look at that yellow line. Please bring up that Bollinger Band. It has been beautiful support throughout the entire uptrend there. If you look at the previous parabola that we used that as support the entire way up. And as well, another bit, aside from Musk saying that he thinks Bitcoin is too high, also remember what he said when he thought Tesla stock was too high, and then it just, but Janet Yellen also came out and had some anti-Bitcoin comments this morning, so that may have played a role as well in the sentiment data. But
she's often, you know, anti-Bitcoin. I mean, that's kind of her whole like view on crypto, right? And when you're looking at the sentiment data, it really did start going down last night. And as it went down, it rode Bitcoin down with it. And then it really, as Bitcoin went all the way down to, what was it, like 47.8 at one point earlier today? As a reminder, I did say it would go down to about 48,000. Not that I'm a technical analyst or
I thought it was
anything.
15.5, Ryan.
Nah, that was last year, my friend. Nice try.
Last year.
But it made sense to me, because once you reach a psychological milestone like 50K and then you go all the way up, I mean, it usually goes down about 2 or 3K below that milestone. That's been Bitcoin's modus operandi. It hit 20, it went down to 17. It hit 30, it went down to 27. And it just keeps pulling back like that. And you see how sentiment bottomed out around here when it really hit the lowest pricing of the session before it started to rebound. And sentiment isn't really all that bullish on the daily or hourly look. But when you look at the Trade the Chain dashboard, you see that sentiment itself long-term is much more bullish. It's just the daily and the hourly sentiment is it's neutral right now, which I guess is better than bearish. But I just don't think Bitcoin's going to recover as quickly as you do, CJ. I think it's going to kind of grind sideways for a bit before it starts to make a move higher.
Ryan, I want to bring up I'm bringing up the chart again that you just showed everybody, because there's two things that really caught my eye. One was right here last night at 21:40, which is 9:40 Eastern time, which is when both sentiment and price action crossed. They lockstep immediately and both went down. They're not always like that. So that showed me that something happened at that moment. Also the same with today. I don't know when Yellen's announcements came out, but you also see that today we have a sharp drop right here, perfectly at 9 o'clock. Sentiment stalled. And at 9:15, both Bitcoin and sentiment just dropped like a bucket on that crash. So I don't know what exactly. I happen to have been in appointment at 9:15 this morning, but it's very interesting, those two confluences of data and what happened at those specific times.
I think that's because it's the morning in Asia, right? Like Hong Kong, Tokyo, they're all like 12, 13 hours ahead. So when the trading session in Asia really began in earnest, that's when traders started, you know, emptying their bags. And that's what set Bitcoin below 50K.
All night long. All night long, that sentiment price just kept going down.
And I think
Monty was licking his chops, CJ.
Yeah, I think one thing we should remember, not only for assets such as Bitcoin, but also Ethereum and VGX, the things that are just going absolutely so parabolic. You're getting longs that are jumping in the market, you know, 50K plus 50K. You're getting longs in Ethereum that are very high. And then you're getting longs in VGX that are above $5-6. And there's so many new buyers coming in at that level that they just needed to get flushed out. And we saw a massive liquidation. We saw price go all the way down to $700 on Kraken.
Oh, somebody throw that up.
Yeah, I'll pull it up here in a minute. I have a feeling that this left a lot of longs, leveraged longs specifically, pretty unhappy.
And CJ, when we see this Kraken chart and that candle, that wick go all the way down to 700, what are the processes with the exchange when it comes to something that happened? This is a one-off that happened with Kraken. It blew out a lot of positions that were long over there. What does Kraken do, or do they even have to do anything to make up for this?
Well, judging by the ways in which exchanges have dealt with this before, namely BitMEX, I don't think anything will happen. I remember there was an instance with XRP. I forgot which direction the trade went, but it was a very similar thing like this. BitMEX was the only exchange in which this type of volatile price action occurred, and it liquidated people. It liquidated people who were, had their entire stack leveraged something. And they unfortunately were blown out as a result. So I think what we should take from this is just if you're hodling or if you're not leveraged, you're not going to get blown out, or you're not going to have to be worried about a unprecedented wick such as this. But when you get liquidation prices that are just stacked so close together in the order book, and then you just get this wall of sells that it gets hit, and then it's just like boom, 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 boom. It really takes price down way farther than it actually should. That's what we saw in March when we had a record amount of liquidations on BitMEX. And I think it got to such a bad point that BitMEX just turned down their system and they shut the site off. And that's where me and Monty probably went to bed when it was like 2 or 3 in the morning. But that was a weird day.
Wow, look at that. I mean,
That's staggering. That looks like a flagpole.
I mean, the Ethereum longs, if they were looking at their phone, Ryan, when that happened and saw that price was 700, that's unbelievable.
I'd be physically ill if I saw that chart. If I was leveraged, the floor would drop out from under me. I don't know how I'd react to that.
Let's turn it around on a positive note real quick. BNB. What is happening with BNB? What are we looking at here? I mean, I know what's happening. I'm just pretending to talk about it like as if I don't. Somebody can answer this.
They're the third largest crypto asset right now. In the last month, they're up like what, 100%?
Third largest crypto asset.
Out of nowhere.
A token, exchange utility coin, Ryan.
Look at this thing.
Wait till you guys see this weekly chart.
Yeah.
It was all right. We just got a new weekly candle yesterday, but
I mean,
this weekly candle was insane. Let's get a
wild.
percentage measure.
Look at that.
150% in 1 week. For a large cap asset such as Binance Coin, which was already a single-digit billion-dollar asset, this is pretty impressive growth.
You guys remember when that thing was like $2?
I remember when it first came out and people talking about how you could do, fundamental analysis on it because of the token burn model based on the income that was generated by the exchange. It was one of the first assets you could actually evaluate through a traditional lens.
As
and there were
so many. He knows how to freaking make money, print it.
Yeah, exactly. But like that's all Binance chain, right? And Pancake Swap. And I was talking before the show, for anyone who doesn't know how Zara does their business, right? They send a bunch of talent scouts out, a bunch of fashion designers to all the fashion shows around Europe. They figure out which designs are going to be the hottest and most popular ones for that season. Within a month, they redesign it and turn it around in low cost factories around wherever they make them. And then they churn it out. And basically Binance chain is the Zara of DeFi and of DEXs and of blockchain in general. It's just taking all the ideas around the Ethereum blockchain and elsewhere, and you can put it there because, like Monty was saying, I think you just copy and paste the code from Ethereum into Binance chain.
And that's why Pancake Swap has gone up so parabolically in the last couple of weeks. I mean, it's been one of the top 5 on CoinMarketCap for 24-hour returns consistently.
The Zara of blockchains.
Interesting. Thanks for that. Thanks.
But that guy who owns Zara is he's one of the most wealthy men in the world. He's multi-billionaire. And
CZ is one of the most wealthy people in crypto.
Exactly. So
multi-billionaire.
Binance is the Zara of crypto.
All right, this is going off the rails quickly. Folks, folks, thank you so much for tuning in today. It was a quick one. We did want to just talk about the bleed real quick and get everybody's responses. So if you have anything to say about it or what your take was on it, please put it in the comments so we could take a look. As always, we're stabilizing out now, so let's keep this run going. Let's last week we told you when we thought it was going to stop, and so, well, Peter Brandt, listen, Peter Brandt, not us. Other than that, folks, hang on to your handlebars. Happy trading, and we will see you again tomorrow.
See ya.